Welcome to another day in the Matrix. This is Red Pill Podcast number 116. Hope you're all having a beautiful weekend. We're just going to jump straight into it today because I have a very comprehensive decode that I want to break down. I don't want to waste anyone's time. So if you are new here, welcome. So great to have you here in the community. If you are new and have yet to get access to our Discord server, just go ahead and send me a direct message on Patreon with your Discord username and last four numbers after your username. I will reply back to you on a Patreon message with the Discord server invite. And if you are new, definitely utilize the search function inside of the Discord. It is very helpful if you are trying to figure out what's going on. Feel free to ask the community over in the general chat or in crypto help. We are more than welcome to help. And I appreciate every single one of you for joining today. We have, as I said, a lot to get into. I'll be going over some more charts than usual, so I don't want to take up too much time in the intro. But definitely remember, get comfortable, get relaxed, grab yourself a cup of coffee or tea, or a glass of wine or beer if it's the nighttime, or if you like to day drink. Enjoy the summertime. No one's judging you. And I appreciate every single one of you. Let's get straight into everything. So we had the Federal Reserve FOMC meeting. It's come and gone. It was last week on June 13th and 14th, right around this moment here where we got a little bit of bearish energy in the crypto market, but nothing dramatic. And then we had that critical date of June 15th that I decoded for all of you a couple weeks in advance. And we've now come and gone through that date. We can now see that June 15th was a pivot, and at least for the crypto market, it was a pivot date for the crypto sector. And it's important because, again, we're focused primarily on cryptocurrency. As I said earlier, I will be checking out some indices, some extra charts. We're going to be getting into the Dow Jones, NASDAQ, S&P to just follow up on what's been going on in the traditional markets. But we have noticed that this pivot date is now showing us a little bit of a reversal. Past 3 days or so have been green. Potentially today could be the fourth green candle in a row, depending on tonight's daily close, of course. And tonight is important not only because it's a weekly close, but a bi-weekly candle close. So it's a 2-week candle closure. We'll be getting into all of that later when we cover the analysis in the podcast. But I wanted to recap the significance of that June 15th decode and that date so far, just holding up as our lows in the microcycle. And believe it or not, a year ago on June 15th, Bitcoin was trading between 20,000 and 22,000. It was right around this moment here where Bitcoin took another leg lower. And what happened is we actually traded about 33% up from this moment right here into this microcycle top before another correction. And if we were to take off of those same levels today, off of this recent backtest of about 24,800 on Bitcoin on this June 15th and go up about 33%, you're going to see that actually brings us into 33,000 Bitcoin. That's really interesting, right? 33% gain and you get to 33,000 Bitcoin. Also, remember, June 18th last year, which was exactly a year ago from today, XRP was trading at its lows in the cycle at 28 cents. XRP today trading about 48 cents, about 50 cents. We've had some trading into the mid 50 cent range, around 55, 56, etc. So slight recovery again from a year ago. And you could see that clear as day in the charts from this time frame of mid-June over to where we are today. So just, we're not being dramatic. We're not being emotional. We're just analyzing the data right now. It's important that I remind people to do this sometimes because when you're in the day-to-day and you're following along perhaps crypto, Twitter, or things that are going on YouTube, there's a lot of drama, a lot of sensationalism, and people tend to not zoom out and just look at it analytically with a scientific approach and a real scientific approach. We're not talking about scientism where it's all emotional and kind of like, you're trying to look for the data that you want to hear. Yeah, it's a sad world we live in, but that's what most of science has become nowadays. But anyways, let's move on from that. We do have this sort of energy to consider, and I believe that this June 15th low pivot in the cycle just kind of something to consider as we've had a little bit of a buyback since. Now, From those lows, as I mentioned, up to about the same measured move, we're getting about a 33% gain, and you can see it bringing us into this white trend line right over here. And if we zoom out, this trend line was very, very important. Just consider this white trend line right here, because it is around the selling climax of the last Shemitah cycle back in 2015, before Bitcoin went from $200 all the way up to almost $20,000. And then you can see after this cycle into the C19 crash, we back tested perfectly on that trend line. And then as of this recent cycle, we broke below it around the November eclipse. You guys remember that lunar eclipse where I think it was FTX got washed out? And we've seen it as a resistance locally. So lately it's been flipping as a resistance. That's not good, but I just wanted to show you how Bitcoin tends to interact with this trend line, and it's been interacting with it going back to, pretty much, let's just call it safe, 2013. And here we are 10 years later. So that's why I just wanted to show you this trend line and the significance of that 33% move into this trend line area again, somewhere around, technically it would be intersecting with 33K on July 8th. Kind of weird if you go to the 2015 cycle, which we've spoken about a couple of times here. You can see this move right here off of the June lows up to July, mid-July. You get to a little bit of a rally. So could this be a mimic of that 2015 moment? It's possible. We're not here to look at data that way necessarily. We're just being open-minded and considering all of, our options here and what we're working with. And hopefully everyone's been developing an investment thesis that's based off of your cash flow, your job you have, your vision, your goals, your wherever you stand personally, and you're not mimicking or copying anyone, including me. I have a totally different thing going on in my life. I have a very particular thesis. I go about my altcoin investing in a very strategic way at very small percentages of my overall portfolio. I've talked about this for years now, my stance on how I allocate my portfolio, etc., so that regardless of what happens in the market, I am protected and I have at least, the emotional stability and emotional control to get through whatever happens next. Because that's really what's the most important thing here. It's not about what the market does. It's about what you do in response to what the market does. Remember that. So I just wanted to share how this $33,000 concept is not out of the cards, because it's pretty much seated at the 0.5 fib. And I know I talked about how I would get over into the analysis later, but these are just some of the little critical points to bring up early on, since we've had, again, another push to micro lower lows, and then a little bit of a buyback now into this other resistance line, this blue line I have right here. Okay. So again, this 33K concept is not hopium. We know that this is a technical target of the macro fib pull of the 0.5 fib. So swing high to swing low in the structure, and we have that 0.5 fib sitting there at 32,700. So this is very technical. And this level of the 0.5 fib it's normally the lowest we see in a textbook automatic rally phase. It's usually the lowest we get, okay? We could, of course, go higher, but with Bitcoin having this high of a market cap and so little positivity going on in the crypto space, unless something very optimistic, like a very optimistic ritual happens soon, we have to keep that technical target of the 0.5 fib in mind and not entertain anything dramatic, especially during these times. And when I speak dramatic, I'm not only talking about upside targets, I'm talking about downside targets. Because another way of just slowing down, taking the emotions out of the picture here, Bitcoin is still at higher lows. We have a low in the structure, higher low on March 10th, and higher low thus far. We are not in a trend reversal in this structure that we broke out of effectively here in mid-March. So we had this resistance here at 25K, this resistance here at 25K. When we broke out of it, all we've done since is back tested a prior resistance. That is bullish. Until we start to break structure, there's no point in getting dramatic. So that's why I'm saying here it's important we stay level-headed when it comes to upside and downside ranges. We're just still here kind of in the middle of the range. One moment, I'm just going to take a sip of water. Okay, so moving on. If you've been following along, you'll know that I have been talking about the solstice, and to keep that in mind for something to take place. And my decode for this was connecting the solstice date over on June 21st to March 10th. And this was the day that Silicon Valley Bank failed. It's really funny that I said that at exactly 10 minutes and 30 seconds because this is 103 days, and that's exactly what I wanted to talk about. The code is living through us as we speak. But all jokes aside, I wanted to point out this, and then we're going to get into today's decode. I have a lot to share with you, so please take notes on this kind of stuff. It might seem overwhelming, but again, I'm just doing my part to give the best podcast possible with the most value and to not be dramatic in the process with any, bread and circus. This is pure truth, esoterica, and to build and expand consciously. So definitely take notes. It will be valuable. Now, this connection of June 21st, the solstice date, over to March 10th, separated by 103 days. Now, it's important we look at the date internationally, which is 10-3, 103, 103. What this ties back to is Mercury. Mercury is 103 in Gematria. And the solstice is actually happening on a Wednesday, and Wednesday is Miércoles, which is Mercury, the day of Mercury. Remember, they just made this new Netflix show called A Wednesday, and I was telling you guys all about that in a live stream. I forgot which one it was, but people wanted me to decode that and why that was getting so much prana around that time, and that's what it is. It's all tied back to Mercury. Hermes, the main character in that show, was coming off as female, but it wasn't. It's a hermaphrodite. It's a you know where this is going. I'm not even going to go there. You already know. That's what Hermes stands for. Hermaphrodite. Hermes and Aphrodite. So this is all about this kind of stuff playing through on the world stage, and that's going to make a lot more sense in a moment when we get over to the NBA Finals and how that all went down. And just have so much to share. It's going to be an amazing podcast, for real. I worked very hard on this one, so I'm so excited to get through, this data. But coming back to this concept of the 10-3 date of March 3rd, when Silicon Valley Bank failed, and then you have 103 days apart from this solstice. 103 is Mercury by the code, and this date lands on a Wednesday, the day of Mercury. Now let's get a little deeper into the code. Of course, we're talking about the summer solstice giving you 53 in Chaldean, which is the 16th prime number. You can see that right here. And you can see that this is a 16 standard date numerology. So we're getting that code there. And 1 + 6 is 7. The 7s are everything in this year because we're in the year 223. 2 + 2 + 3 = 7. You need to practice that standard numerology whilst you're in the basic phases of decoding. And when you start getting more advanced, even intermediate to the advanced level, don't forget these fundamentals. Continue to utilize them. They're important. Fundamentals are everything. The basics are 10 times more useful when you actually use them. And I know a lot of people that get more advanced in this stuff and they tend to disregard and skip over some of this basic stuff. And that leaves a lot of data off the table and it makes their judgment poor, So just keep those basics. It's very important you do that. Now, we're just talking about how this 53 in summer solstice connects to the 16th prime, and we have a 16 date numerology, of course, on the day of the solstice. Now, let's go back to Mercury, because we have this 86, and 86 you can tie to the solstice date by connecting the solstice date to the first day of Rosh Hashanah. So let me show you that. 9/15, first day of Rosh Hashanah, 86 days. Mercury equals 86. All right. Now, if you look at the date numerology of Rosh Hashanah, which is the 16th of September, it is a 68 date numerology. 68 is the mirror of 86. And Mercury is also known as Hermes. and you can see Hermes by the code giving you 68. All right. Now notice that September 16th also has a 23 standard date numerology, just like Mercury gives you that 23 date numerology. And this is the last day of the Jubilee, and Jubilee giving you that 23 in Chaldean. All tying back to Bitcoin, of course, giving you 23 in Chaldean. So notice how September 16th is tied into a lot of my decodes because we are still in that Jubilee year and everything continues to come back to Rosh Hashanah. We've been using that for a while now. We're going to continue to. I don't know if it'll be as critical next year because we'll be out of Jubilee, out of Shemitah, and really nothing to consider until the next Shemitah year, right? So anyways, with that being said, Mercury is Hermes, who is also Thoth. So just go to the code of Thoth and we're getting 25. And you guys probably know why this 25 is so important because we are in the year of the rabbit. Rabbit is what we've been using in our decodes. It's how we determined how the Chiefs would win the Super Bowl. It's how we determined how the Denver Nuggets would win the Super Bowl. And it's how we've determined a lot of things to unfold with utilizing the Chinese zodiac by the code. So we're in the year of the hare or the year of the rabbit. We have 25. I was just telling you how Thoth is Hermes or Mercury, part of this decode, 25. We're talking about crypto, which is 25. And the solstice is in the 25th week of this year in the Gregorian system. Week 25 starting tomorrow, 25th week, all tied back to the year of the rabbit. So this solstice is also known as midsummer. You sometimes see it typed a different way, but in English, it is midsummer, and that gives you the 33. And remember, we were talking about that 33% gain for Bitcoin to 33K on the recent lows from June 15th. And it's wild how let me show you this really quickly, how summer solstice is 191. 191 is your 43rd prime number, and midsummer giving you that 43 in full reduction, and 43 is your 14th prime number. And that comes back to the NBA championship that just happened where the Denver Nuggets won 4 games to 1, the 1-4. And they're wearing the same colors as the Los Angeles Rams, who won the Super Bowl in the NFL during the year of the Shemitah. They are the Ram. Ram gives you 14 right there. LA Rams was the team name. And you're going to see LA Rams giving you 14 in Chaldean. Okay, this is all tied together. I did the same decode a couple weeks before that Super Bowl. And we knew the Rams would win because of the symbolism of the ram's horn, which is blown by the rabbi. The rabbi blows the shofar during the Shemitah. That was during the year of the Shemitah, right? Ram is Mars, Aries. This is all about war. That's why Ukraine and Russia went to war right around that time, because they have the same color scheme. It's all symbology. It's all symbolism, right? So this comes full circle because I was talking about Hermes, how it equals 68, 32, and 31 by the code, just like the city of Denver equals 68, 32, 31 by the code. Remember we were talking about Mercury and Hermes and how Mercury gives you 103? Well, 103 is your 27th prime number. And this 27, again, coming back to Denver, is your 27. So this is pretty amazing how this is all tied in. Of course, Mercury and Hermes is the ruler of fiat money, money created out of thin air, the stock market. And we saw the Denver Nuggets win in the same week the stock market rallied another leg higher. This was all a ritual tied to the Federal Reserve, which is mercurial as it gets. It's as mercurial as it gets symbolically. Their logo is literally the eagle, which is Hermes. Who did the Kansas City Chiefs beat in this recent Super Bowl? The Philadelphia Eagles, right? It's all symbolism. So Denver, 68, 32, 31, and then you have Hermes giving you 68, 32, 31, all by the code. Let's hang out on this 68 for a moment. I was just talking about it ruling the stock market, well, you have stock equals 68 and 14. But look at the 68. You have market equaling 68. Market is Mars. Anything with M-A-R is Mars, which is Mare, the sea. It's currency. It's Mare, which is Mary, the virgin. Money created out of thin air. It's the virgin birth. This is how finance works esoterically. We're revealing it all here. It's important you pay attention to this. It's not what it seems, okay? It's written in parable. So keep in mind, tomorrow is actually a 68 date numerology. Let me show you that really quickly. Monday, June 19th. We have that 68 right there. So pay attention to that and how it shares the same date numerology as Rosh Hashanah, the 6823, 6823, separated by 89 days, which is the 24th prime number. And again, you're going to see that 24 with Hermes by the code right there. So this is important because tomorrow starts the 25th week of the year, which is crucial because we are in the year of the rabbit, as I told you earlier by the code. And this 25th week of the year actually ends on June 25th. You could see that right there. So that's the 25th day of June. June is named after Juno, which ties to Juno Moneta, which is where we get the word money from. So we know June is also an important month for finances, depending where we are in the 7-year Shemitah cycle and Jubilees, of course. So even more 68s we have. Moneta equaling 68. I mean, how crazy is this? Let's go to the periodic table. The 68th element is erbium. And if you just type in erbium, 68th element on the periodic table, erbium equals 68. 6832, just like Hermes in the same ciphers. It's mind-blowing. You can't make this up. It's absolutely mind-blowing. And speaking about the number 14 we were talking about earlier, remember the Denver Nuggets won 4 games to 1 in the series? 6 plus 8 equals 14, right? And the main star of this whole series was this guy, Nikola Jokic. And you can see that his last name by the code, it's going to equal 14 in Chaldean. And why this is so important is you're going to see the number 41 right here in his code. He's the 41st overall pick in the year of 2014. It's amazing. You know, it's really incredible. So, of course, the 14th element on the periodic table is silicon. Silicon. Just like Silicon Valley Bank failed. And the solstice on June 21st, as I was showing you earlier, is tied to that date, March 10th, the day that they failed, by 103 days, which is tied to Mercury. Mercury, again, let me show you by the code. Going to give you that 23 in Chaldean, just like silicon equals 23 in Chaldean. Now, what makes me think of, whenever I think of silicon, I think of silica, which makes me think of Zilica. And Zilica also has the same numbers by the code as Mercury. We have that 8641, 10340. You're getting the same thing going on here, 10340, 8641. Pretty much the same code, just mixed around a little bit. Sorry, I spelled that almost... I spelled it with the correct letters, just out of order. That's what's nice, actually, about the Gematria calculator, is even if you have some dyslexic moments, it's okay. It's still the same data in the output. Anyways, getting back to all of this, that player, Nikola Jokic, his nickname is the Joker. And I find that pretty interesting, again, especially anyone who's into the cards, the playing cards. You know, you have the Joker card, which is typically associated with the Fool card in tarot. But let's look at this code here. We have 59, which is your 17th prime number. You could see that right here. And a 17 in Chaldean. So we're getting 2 17s tied back to this. And 17 is the 7th prime number. Remember, this is the year of 2023. The 2 plus 2 plus 3 equals 7. We're still in the energy of the 7s as long as we're in Jubilee, which ends on September. Septem is Latin for 7. It is the 7th month in the Hebrew calendar. Keep this all in mind. So this win for the Denver Nuggets, to me, seems like a signal for a lot of events to unfold between now and October's solar eclipse, a couple weeks after the autumnal equinox and the end of Jubilee. This could be a bullish sign based on the decode, specifically because the Denver Nuggets tied to mining, tied to currency. You could see gold in their symbolism. And look at the stock market right now. So my intuition tells me that with all the fear in the crypto market lately, it's shaken out the last of the weak hands. And now with the sentiment so drained and with so little excitement, these are typically the moments where the bears get blindsided and the market maker sends us in the other direction. This is when the market maker likes to, dramatically pivot. So we can see this recent Federal Reserve FOMC meeting went very positively for the stock market, and this hasn't affected the crypto market. Let me show you really quickly what I'm talking about, because we're going to be getting into this anyways. Let me go over to the NASDAQ and show you what I'm talking about. Look at this rally that we've seen over the past 30 days or so in the NASDAQ. It's a parabolic run, okay? So this Fed meeting recently was very positive for the stock market, and this hasn't reflected in the crypto market at all over the past couple months, which is rare. But we're all well aware that there's been isolated attacks specifically on the crypto sector with what happened with Terra Luna, then FTX, and now with Binance and Coinbase and the Securities and Exchange Commission, all while the Ripple and SEC case is still going on and the SEC coming after even more altcoins recently. This exoteric bread and circus is causing retail to lose trust in the sector. And for long-term investors such as myself, that's very bullish for me. I've always spoke about the expectation for a washout of a majority of the altcoin market, leaving only a handful of solid projects at the end of that ritual. We've been watching the dominoes fall one by one, but ultimately a lot of bad actors in the space are still around. So a ritual is needed to wash out the nonsense and leave what was designed and destined to be here for the long term anyways. So for me, this is the most exciting time to be involved in this space. We're dialing in our investment thesis month by month and disregarding the drama and the noise along the way. I'm more focused than ever, even amongst the so-called chaos in this crypto market. It's more important, and what I want to, emphasize is that it is beautiful to be together with all of you in this community while this is all going down. We're definitely the focused amongst the distracted. It's important we continue to collaborate together to decode these markets and continue to sharpen our skills, analyzing the charts so we can stay level-headed in our approach. So this is the perfect time to pivot over into the charts. I hope you guys enjoyed that decode that I just shared with Mercury Hermes, this number 68, and how tied in it is to everything that's been going down. And I'm really excited to hear some of your feedback around what you anticipate to happen with the Solstice. And keep in mind this idea, this theory about a 33K Bitcoin going up 33% off the recent lows, and how that could very well be in the cards very soon, especially with today being the new moon and the 5 to 10 day window. Sometimes, depending on where we're at, we tend to get our energy fulfilled by then. So we'll see how things go. We had a little bit of bearish reaction to that FOMC meeting for the crypto market, but overall the stock market is looking, insanely bullish for the fact of what's going on in the overall economy. Anyone who's aware of what's going on in finances in the overall economy, when they look at this NASDAQ chart, they cringe how unrealistic this rally has been. And it shows you how this speculation can just come flooding in, even when we're in horrible times financially, when it comes to the regular people in this world, the middle class. Okay, so I should just very, very quickly hold off on this and get to a small recap on Hex. It's going to be very quick, but remember in my last Red Pill podcast, I talked about this concept of Hex slowing down for a moment on the sell-off and coming up into the prior lows that were potentially holding as a support at 0113, which was the trading low of May 28th, June 5th, and when we broke eventually on the June 7th candle. Now, look at what's happened in the market. And if I go over to my Twitter account, you're going to see I shared this post a couple days ago with everyone, or yesterday, excuse me. And this was a screen cap from Red Pill Podcast 115 last week. And at 49 minutes and 48 seconds, you could go to this podcast and you can see I drew this yellow line coming up perfectly into that level. And what I went on to discuss is how we could actually get rejected there and it could lead to a lower low. So we have to see what happens here with Hex on this rejection, because it was a 20% candle in this single day, and then it ended, oh my God, almost 30% in a single day, and now down thus far, almost 20% to the downside. It's not looking so good. So, there's a lot of positivity and negativity, and it's just this tug of war. And I think it's so important that we just stay clear-headed about this kind of stuff. And for me to not even be invested in this project and be so accurate with the way we're determining these big pivot points, it shows you that you don't need to be so tribalistic and, driven by the opinions of people who invest in these projects. It's really important to learn a skill. We're here teaching skills. We're creating self-reliance. We're allowing you to see that you can use the system of decoding, or if you don't like the decoding or it's too complicated for you, you could use the TA. And combining the systems makes you elite. It really does make you an elite amongst everything else that's going on here. So just consider this trading range here between October 2020 and this bounce off of the February 23rd lows of 2021. That right there was a horizontal trading range that did have a lower dip before recovery. Okay, and that dip came right down to 0.03, and that will remain my lower target on the downside, especially if we cannot get above the 0.13 cent level. So we haven't traded it yet, but just keep this W right here in mind. And I like how clean this W was with the rally up to 0.25 and then the pullback to the neckline of that pattern. Very, very bullish setup. Okay, so right now, chart's looking ultra bearish. Even with this recent buyback, this is nothing to get excited about. Keep in mind the 0.134-137 level or 0.138. And if we can't recover over that and start, solidifying weekly candles, bi-weekly candles into the 2 cent level, this is still just looking really, really, like there's been an exodus from this project clearly. This is like a 98.5% sell-off from all-time high, and there's very few cryptos that have recovered from a 99% sell-off back to new all-time highs in price discovery. It's very rare. So I'm not, trying to hurt anyone's feelings. I'm trying to be somebody delivering clear and level-headed analysis on this project, especially for this particular community. So I appreciate everyone's support coming over from the Hex community. I know you guys appreciate these updates, and I know you appreciate the accuracy on what's going down here. So I gave you all the analysis. Now we're going to move on to a little bit of what's been going down in the traditional stock market. So we have the Dow Jones here. We're going to be getting into a little bit about the 2000 market of the dot-com bubble and the 2007-2008 housing market, and how we've had a pretty similar relief rally off of the initial sell-off, which then got rejected and went on to lower lows. So right here, we're looking at the Dow Jones, and we could clearly see that, actually, what I really want to show you is this. Go back to the Red Pill podcast where I drew this out. I haven't erased it since, but we've actually played out that concept of getting to the 702, and now we're even extending higher. So if we were to see the Dow break above this high right here from December, the end of last year, and get above the 786, that would be one of the most insane rallies, especially with these market conditions as a relief rally. That's not typical in a stock indice. It's more typical in something like a penny stock or like a crypto with a lot of volatility. So this is madness. And this is looking like it could be potentially an inverse head and shoulders play. I mean, I'm not going to get too into the patterns here. I just want to show you this. So we did have a rejection going on for, pretty much time and time again for 190 days that we finally solidified as a breakout because we got above these lower highs. we've effectively broke through even the highs that came in before the April highs, and now we're pretty damn close to breaking. I mean, this is just, it's jaw-dropping how this market's performing right now, all off of Federal Reserve, nonsense. So here we are. This is like unbelievable. It's too funny to me now as a technical analyst, like just how make believe all this fairy dust is. But we have to be level-headed. We did talk about this idea of the Dow breaking up a little bit more. We did talk about the S&P finalizing its automatic rally. Now that it's gotten above the 702 fib, I mean, that's pretty obvious. Just so you guys are aware, when you get past the 382, that's technically when you start considering an automatic rally. And when you get above the 0.5 is when you expect the finality of the rally into the golden pocket. And this could go to the 786. That's how bullish things are. So we're just going to let that, do what it's doing as long as it's continuing. As long as it's continuing in a bullish trajectory, what can you say? What really can you say? So let's get over to the NASDAQ. And we have something really important here on the NASDAQ. For one, we are at the highest RSI levels that we've seen since September of 2020, which was right here. And that was after this V-shaped recovery from the C19 crash. Just boom, rallied the whole way. 82% in 168 days. So if we were to go off of this low to where we are now, we're at 46%, 250 days. I mean, this is madness. This buyback is madness. It's been literally almost parabolic. So we're getting a little overheated on the RSI is where I'm trying to go with this. We're mid 70s is wild in the supposed bear market. I think on a textbook definition level, the traditional analysts would call this a bull run. That's what they would call this. I don't know what those guys are saying because I don't pay attention to them, but I know that they have very loose and almost non-budging terms for ideas like what a recession is and what a bull run is. And they went from calling things a recession when I wasn't calling it a recession, and now they're calling it a bull run, I'm sure. I could just assume that. That's the way these talking heads pivot so quickly. But yeah, rallying straight through the 786 is insane. So the fact that we've gotten rejected or back below it, it's kind of normal, and this could very well be the end of this rally. So let me zoom out now and go to this 2008 market, and you could see what we did. We pulled a bullish fib from this all-time high of November 2007 down to the swing low of March 2008. We recovered into the golden pocket. That's your automatic rally. We come back down to the 236. That's very technical. Then we got a lower high, a little bit of a buyback to trap bulls. And then breaking through this 236 was a mayday. Like, get out. And you broke through. That's your dead cat bounce scenario, which is lethal in this moment because we had that historic crash of the housing market bubble, the subprime mortgage crisis. So we've actually hyperextended past these levels. And now let's go to the 2000 market. This dot-com bubble was very dramatic, especially when we're looking at the NASDAQ, because that's mostly tech, and that's what that was mostly covering. So you can see here, if I zoom in, we have swing high. Let me correct that a little more, get it a little cleaner. We have this swing high to swing low. Boom, boom. And then we have this touch at the 702 fib coming in and then drain out. And it got really bad after that. So look at the time frame similarities as well. We have this breaking on September 19th onto lows that went straight into November. And then you have right here, we have this breaking into about November and then continuing for years. This was October 2000 to October 2002. That was 2 straight years of lower lows, breaking of structure, and coming all the way back to the levels of 1997. Now, I don't think it's going to be as bad as this because we are moving tech. everything. We have Apple releasing the Vision Pro bullshit. Like, this is where we're headed, man. We're heading tech. So I don't think it's going to be this bad. I don't even think it's going to be this bad as this sell-off right here. We'll just have to wait and see. I mean, my targets are within this range of 7,000 points. So let me see the total correction off of swing high to swing low. It's about 54%. This was probably like 70%. Oh my God, 83. Geez. So let's entertain the idea of a 54% sell-off and take it from where we are today. And you're looking at, yep, right there about 7,500 points. So that was pretty much where I said. The reason I like this level is if I take a horizontal and I put it right here, you can see what I mean. So you see peak rejection, and then you have gravitating back up to that level, snaking around that level, and then even with the C19 crash, piercing through that level and getting bought back above it pretty quickly. 7,700 on the NASDAQ is clean. It's a clean level, and it would be your 54% sell-off, pretty much mimicking what happened back in this 2008 crisis. I don't think it's going to be nearly as bad as this dot-com bubble because we're tech now. You know, this is full-blown. Back here was all speculation. You know, it was really speculative. What's speculative today is crypto, right, and blockchain technology. And in that 2020 cycle, we saw all this memery hitting the market, these meme coins and these nonsense NFT projects and just all this make-believe fake business, as I like to call it. And it was a lot of bad actors and a lot of stuff went away. And it's sad to see that even companies that showcase themselves as legitimate were fraud. And here we are kind of just seeing the truth of the matter now. All the meanwhile, they were having you think Tether was the problem and all this other, conspiracy. And we watched companies that were being supported by people that hated Tether and made FUD content about Tether. And those companies actually went away, and Tether's still here. So this is why with my work, I try to keep my eyes and ears open and remind myself that whatever's popular is wrong. And if people keep pushing these theories and now they're becoming popular, it's where I utilize my discernment. So I still believe we're going tech. I think this sell-off still has the opportunity to make it into 8,000 points. As low as 7,000 points. So I would just keep that range, 7,000 to 8,000. And we're talking about a quick recovery off of that, and I think for the majority, that would lead to that dramatic washout of the altcoin market like I talked about earlier. So just wanted to share that I do think we're a little overheated on the NASDAQ. The S&P does still technically have room to the 786, and the Dow Jones, of course, has a little bit of room up to the 786. Could this rally continue? Sure. I mean, there's no Fed meeting until July 13th or something like. Let me just show you really quickly. So we have the next Fed meeting. Okay, July 25th, July 26th. That's after the next new moon. Beautiful. I mean, wow, we really could have relief all the way until then. What a scam, but we're just riding the wave, right? Let's get over to Bitcoin and see what's going on there. Just to show you, zoomed in a little bit more, I talked about this white trend line earlier. Now we have this blue trend line and this support line. So this support line is coming in at the December lows, and then the test on March 10th when we had this bigger washout with Silicon Valley Bank failing. And since we've actually tested it and we've pivoted off of it, and now we have confirmed 3 touch points. So this is a confirmed trend line that's been in play now for technically 170 days. Very important support line. Now we have a very important resistance line. I know this isn't the cleanest drawn line. Maybe we could go to this chart. It might be a little cleaner. There you go. This is showing a bull flag concept, but I don't want to entertain that so much right now because I've already talked about that in the past. And this going off of your local high at around 31K on April 14th, and all of these lower high rejections coming in since. So we need to keep this in mind. And if I was to pull a fib, I want to just show you if I was to pull the fib from that 31 level to right here. I know it's a little bit noisy on this chart, but you see right here, these highs coming in on May 28th and May 29th, touching at the bottom of what would be our 618. We need to get into that 702. And ideally, we need to get above 30K, because once we do that, once we get above 30K, we're starting reversal. As long as we're below 30K, though, it's not really, looking so positive. So this bull flag concept, sure, but I don't want to entertain it so much. We need Bitcoin to actually bounce from here and recover. We need to see bullish recovery. Until then, really not a whole lot to get into. I want to talk about the 12-hour chart, and then we're going to do the bi-weekly, weekly 5-day closure and go through the analysis thoroughly. But just my quick thoughts on it here. We're continuing these lower highs and lower lows, but that's only in the micro. In the macro, the case still stands. We're in a bull trend. Let's close off all of the drawings and turn on the RSI, and we do see a bullish divergence. So we can see lows coming in at 26,000 and RSI lows. Actually, really, it would only be starting about right here. More of a hidden. We can't entertain that too much either. So yeah, we do have lows coming in around 25,500. We got the RSI push down to 31. And then here we have a lower push around 24,800 and higher RSI read of about 32. It's a slight divergence. You wouldn't really want to start entertaining this again until you have a little bit of trend reversal, which would be 12-hour candles closing above 28,000. So keep that in mind. 12-hour candle above 28,000. That'd be bullish in my opinion. So let's go to the bi-weekly. We have that close coming in here today. I'm going to turn off the drawings, but I'm going to keep on my indicators. All right. Ooh, okay. Yeah, I don't like this. I don't like how we are trading below the 8 simple moving average. It would be really nice if we could get bought above that. The 8 simple is sitting at 26,900. Let's get to 27,000 on this bi-weekly close. That would be positive. And then we have a clear bi-weekly resistance coming in at 28,550. Again, if Bitcoin can close above that 28,000 level, I think that would solidify push to the next move up, which would be about 33,000. That's right there on the 55 simple moving average on the bi-weekly. Let's look at the EMAs. Okay, the EMAs are not in a full bullish posture yet on the bi-weekly, but they are about to start flipping because technically this 13 simple is kissing on the 21. That would start across, and then getting that 13, the blue moving average, to cross above the 34 would be really nice. We have a little bit of a ways to go. More importantly, we need to push back up into the 28,600 level to start creating that cross, I believe. Now we're looking at the weekly. We're holding on the 21 weekly. That's very good. We're clearly getting a little bit of resistance on the 13 EMA on the weekly. We were holding it as a support. Now it's kind of flipping as a resistance. That's not good. But the EMAs are still in bullish posture. So that's a positive thing. As for the 8 simple moving average continuing to be a resistance, that is definitely a problem. I would like to get over that. Again, that's in perfect alignment with this idea of pushing into 28K. 28,500 needs to be recovered, in my opinion. And on macro closes, so within the next week, it would be really ideal. And leading into the monthly close for sure. Okay. We still have the wolf cross in bullish posture though, where we have the 8 above the 55. We're holding the 200 exponential. It's not looking that bad. Let's get to the 5-day. 5-day is really not looking good with these closures below the 200 EMA and the 8 simple. I don't like that. We've pierced below the, okay, so now that I'm looking at this, it does remind me a lot of this March 10th washout. So we had a dip down below this 34 EMA, and then we followed it up with a 5-day candle that got way above even the 13 moving average. So just consider that we're in a bullish posture for the 5-day EMAs where the 13 is above the 21, above the 34. We had this pierce below those levels very similarly to like what happened in March. Now we have this 5-day closing tomorrow night. Tomorrow night's big. I think that 5-day closure will say a lot. And if Bitcoin could get bought back above 27,000 and have a similar concept to this move right here, this could have been your washout before what would be considered like a spring. Again, I'm not trying to play bullish only here. It's just what I'm seeing in the charts. So now when it comes to downside, very considerate of the 55 simple moving average sitting here as a support, which we saw also similar chart structure to March. 7th 5-day candle close, which was that Silicon Valley Bank failure. Just keep that in mind, that 55 simple moving average on the 5-day. Let's look at the 3-day. 3 days looking okay, but this 8 simple and the 55 is starting to squeeze together a little bit. Keep that in mind. We have a 3-day coming in. Oh, fresh 3-day candle just closed, and we got above the 8 simple. Okay, so this is the first positive sign I'm starting to see. We got this 3-day recovery candle as of yesterday above the 8 simple and above the 2-day 8 simple. That's good. Finally, something. So, okay, look at this. We back tested the 3-day 55 simple, and then when we got back above the 8 simple, we actually rallied above and started a new uptrend. That could, again, give us a little bit of an insight, because I just want you to see what I mean now. When we're below the 55 simple, it's a rejection point. You see right there, we were below, rejection off of this white moving average here, huge rejection off of that white moving average. But then here on March 10th, we flipped it, and then now we're back testing it. One moment, I'm just going to drink some water. Okay, so just look at that. And we're not looking at a little bit of data right now. Like, we're looking at data that's been going on now for 500 days. So that 55 simple is very crucial, guys. Keep that in mind, all right? 2-day, really not much to say here. Let's look at the daily, and we've effectively back tested the 200 simple moving average. We're now above the 8 simple moving average, and we know we have to recover that 55 simple. So we got rejected on it back on May 28th, May 29th. And getting back above it is only one part of the story. We also have to have a wolf cross where this 8 gets above this white 55 moving average. And now the 200 exponential and the 200 simple are sloping to the upside. So that's looking positive, and MACD histograms flipping green. That's very good. Again, we might have a little bit of a bullish divergence with the lower low, but low and higher low on the RSI. And still, I want to see above 28,000 on the 12-hour candle closure. And then that would be where I just anticipate us to get a little bit of recovery back into 30K. Just think of it like this. On the 8-hour, 12-hour closure, we want to get back above 28,000. On next weekly close or some sort of weekly or bi-weekly, we want to be recovering over 30K. And then once we're getting those in, it's very obvious that Bitcoin has washed out all the bears and all of these, weak hands on this recent sell-off, and it needed to get rid of those people to pivot out. Okay, so let's move on to ETH. Same story. We probably can't chime in on too much data with this. We did get a little bit more of a dramatic sell-off, but if you follow my moving averages that I teach you, you would have known that the 200 is crucial. So look, on the washout of March 10th, got below the 200 simple, bought right back above it, and then we continued out. Here we are, same story. Look at even how the 200 exponential is separated by the 200 simple. It's the same structure we're in today. Look at how the 8 simple moving average got slightly crossed below the 200 exponential, just like it is today. And now we're rallying off of this. So what would make things very positive is getting back above the 55 simple moving average, about 1,840 Ethereum. And then structurally, you want to see above 1,900. And then you would just call this a spring. You'd have your selling climax, your buying climax, selling climax, automatic rally, and then your spring action followed by a test, SOS, backup phase, LPS, etc. Okay, so yep, that would be what I want to see in conditions for XRP. Whoa. Okay, this is very interesting, and I'm going to close off on this. This could be very interesting for the people who are into Ethereum. If you look at the automatic rally phase of 2019, we hit on the bi-weekly 55 simple. Then we hit on it one more time before the C19 crash. And then when we got the wolf cross of the 8 above the 55 on the bi-weekly, we rallied into a bull run. Now, we haven't tested the bi-weekly 55 moving average yet, and right now it's trading at 2,300. Remember, we were talking a lot about the number 23 and how we're currently in the Jubilee year. Jubilee equals 23. We're in the Hebrew year of 5783. Imagine if Ethereum hits 2,300. One last shot to the upside, rejection off the 55, and then we cross lower. It'd be fascinating. I'm still actually a little convinced, though, that this could be your selling climax lows, and we might not go lower even if we were to have a spring. Now, a spring could send us into like a $1,000 ETH, but this might be the low on ETH, that 700 or that 807, whatever level it went to. I know it was different on a lot of charts. But okay, we're going to move on from this. Just consider that swipe into the 55 simple moving average on the bi-weekly. It's pretty amazing. A weekly close. Yeah, wow. Okay. Yeah. I think that daily analysis really settles it, though. Just getting back above that 55 simple and then closing dailies above 1,920, that would be kind of your trajectory for recovery. Now, as for downside, the next swipe would be 1430. So it's a pretty dramatic pullback. It would be somewhere between 1,500 flat as a psychological level and then as deep as 1,400. And it needs to hold there. Otherwise, they're just going to head into a double bottom. I'm more optimistic, though, that we get a little bit more relief, at least one last push. Now, XRP, not a ton to talk about because, again, I warned everyone of this static that was going on with the Hinman emails, and people are getting really mad at me for this. But I was preparing people to not get their hopes up, and it's, now that it's come and gone, I hope you see why I was saying this. And it's very important that people realize that whatever's popular is wrong. So we were hearing about people predicting $92 XRP off of this Hinman email shenanigans. And look, XRP went up to 56 cents on that day for like an hour, and then it got rejected and went on to an even deeper low as of 2 days ago. Nothing positive came from this. And people think that this is all driven on news, and it's not. It is not. It's esoterica. It's gematria, numerology, astrology that runs this market. If you think it's something else, it's time to wake up. And we see how many times the XRP army gets like herded like cattle into the belief that this type of shit that's going on with this, the case and Judge Torres and Brad Garlinghouse making videos. And it's like, it doesn't matter. It doesn't matter. If the XRP army really wants this thing to recover, all of them need to invest in it now. Invest more, tweet less. That will change the price. But people don't really care. They rather just wait and wait and wait for some magical, moment to come. And what's really funny is it's almost like people forget how price charts, how price action works. You need to have money going into the asset. So are people trying to say that that investors are going to wait until some sort of clarity comes for you to believe in the project to put money in it? That's silly. I thought you believed in it now. You see how it's like contradictory and kind of weird? So again, we're just the clarity amongst the static here, and we see how this all went down. We got to pull back to a textbook technical level of the 55 simple moving average. It's what I teach you. If you would have known about the TA, you would have known about where this could pull back to and where it's most likely to hold on daily closes. I've said it many times over the past 2 years. You need to keep the analysis in mind and the skill because that's what serves you best, not the news, not the drama on Twitter. So we've gotten a pullback to a very natural technological level. Now what we want to look out for is this cross. If this 8 can stay above the 55, that would be positive. If we can start trading back above that 8, and then really what we want is 54 cents on a daily close, this will all remain in bullish posture. The 200s will continue to slope to the upside, and this will just be a short-term correction. All good in the hood. We could keep it moving. Now, let's look at how our EMAs are starting to coil up, all of them in a rejection zone, pretty much where we're gravitating to right now. The reason I say a rejection zone is because we're starting to see the 13 cross below the 21, so it's starting to show a little bit of a delay. We want those to be in bullish posture, and they're not. So let's look at the bi-weekly. Now, the bi-weekly is just testing back on the 13 and 21, so that's looking pretty good. And I think with today's closure, we might actually see the start of a bullish cross of the 13 above the 21. That's very positive. Okay, so I like that. And for the long-term investor out there, that's a really nice thing to see. So consider that. Now, remember I taught you guys about this analysis of a very important cross that was coming in around here. I believe it was the 2-day or 3-day 55 and 200. Yeah, it was right here. And how, no, it wasn't. Sorry. I want to be precise on this because it's important. Okay. It was this cross right here where we got the 55 going above the 200 simple moving average, just like we got it back here on May 1st, where this 55 got above the 200 simple moving average. And then we played around for a little bit before just going up in a straight line. Now, this is kind of what I anticipate. If we go off of the time frame of this cross initiating, it would be technically, I want to call it technically right here. And if we go to that top, it was 68. Holy shit, 68 days. How many times did I talk about the number 68 today? Are you kidding me? Yo, I'm not joking around right now. I know Ripple equals 8640. That's tied back to Mercury. 8640. 6886. Holy shit. All right, dude. Well, that's really important. Let's go off this cross. It's July 8th. Are we about to have a 4th of July ritual? Yo. When's the full moon? It's July 3rd. Dude. This is insane. We could have a 4th of July like moment. I remember that one 4th of July. I think gold was like $17.76. Silver was $17.76. XRP was like 17 cents and 76. Yeah, it was like, where was it? Sorry, guys. Yep. It was 0.776 on 4th of July of 2020. Yo. And that was like, this is insane. Are we going to have a 4th of July rally? What's 4th of July? Sorry, like I need to do this right now. It's leading into a Wednesday. Yo, okay, this makes total sense. This is 9/11 day. Okay, now I'm getting it. Look, it's 117. Bitcoin's 117. 7557. We just had Super Bowl 57, right? 187. Okay, I don't have the time for this right now, but this is sick. And remember, 9/11, that ritual back in 2001, that is 7/11. It's not 9/11 because it was September 11th. Septem is 7/11, 117. Yo. That's it, dude. That's dope. That 68 code is magic. I don't want to talk too much about this because I'm fluffing things up right now, but I would not be surprised now if there's some sort of 4th of July thing that happens. Remember, 4th of July is the United States Independence Day. We just had the Philadelphia Eagles lose the Super Bowl. The original capital of the United States of America was Philadelphia. You know, it had the Freedom Bell and like all this Benjamin Franklin psyop Nazi. Like, it's all about the concepts here and the symbolism, right? You have to take this into account. The Kansas City Chiefs, who have the same color scheme as the flag of the United States of America, won. Denver Nuggets. All right. Okay, I'm trying to piece this all together. This is pretty crazy. I need to get to these altcoins, though. Otherwise, this episode's going to be way too long. But that's dope. Off of that cross, we had 68 days later, we topped out. And this was the Flare airdrop moment. It was all, and then the dump was the SEC case. This is what they say, right? But yeah, off of this cross right here, it's like right around there, September 17th. Okay. 68 days. Wow, dude. And then what's 68 days after? God, I'm killing time, but this is just so fascinating to me. It's literally leading into Rosh Hashanah, 68 days after. Okay. This is fascinating. Let's keep this all in mind. As for XRP downside targets, we are holding trend. We have a low, higher low, technically a higher low. It's looking very good. I don't want this to flip into an M pattern. M patterns are bearish typically, and you have a return down to structure somewhere around 36 cents. But that would only be if you started to break on 2-day closures or 3-day closures around these levels here, 40 cents. 40 cents is going to be a psychological level. And it could easily turn into a W pattern. With this right there would be pretty janky, and XRP tends to not do Ws very clean. So I wouldn't entertain too much of that. And then we still have that 54 cent to 60 cent level to keep in mind to the upside. Until we start getting above 54, 55 cents on a 3-day, 5-day weekly closure, no parties. Just straight up analysis. It's important. Ocean Protocol. What's going on here? This is the first altcoin of the day. Let me turn off all the noise and just play with what we have in the candles. Okay, so first thing I'm seeing is an uptrend over the long term. We have a chart going back to 2019. That's good. It had trading in play before the C19 crash. It did not go lower than the prior lows in the C19 crash. That's really bullish. A lot of coins went on to new lower lows. If we take off of the structural support, which is somewhere around 2 cents, up to where we're trading at today, it's 1,500% higher. That's very nice to see. Let's look at the correction now. We've had a total correction of 93%. That's very normal. But what this looks like is this is the automatic rally is done. So we have buying climax, selling climax, automatic rally is looking pretty much, yeah, that's pretty much it. So let me pull fibs and confirm. Yeah, I mean, if it's 300, 400%, yeah. So most automatic rallies for cryptos after they've lost 90 to 95% is about 300 to 400% to the upside. This went up almost 400%, so it's pretty normal. God, I've done this so many times now that it's like, I don't even need to think. It's pretty crazy how many charts I've analyzed. It's amazing when you practice a skill so much, it becomes intuitive and it's like second nature, and you could, really save a lot of energy. It's nice. And I know so many people now that have been going through these podcasts, have invested in the Crypto Mastermind course, which really means the world to me. I appreciate your support. And they're able to really quickly figure out where they are in any chart they look at. It's crazy. So we have your buying climax, selling climax, automatic rally, and it's here. Remember, I teach you guys when you get above the 382, that's where you have your initiation into a confirmed automatic rally, and then your 0.5 fib is about as low as you get in the automatic rally. And we technically got smack dab in the middle between the 0.5 fib and the 618. So to me, that looks like the automatic rally's top. Now, the interesting thing about automatic rallies is you could have a double top on the automatic rally or a bull trap fake out where you go slightly higher than the prior peak, and that really shakes people out. It's rare, but it happens. Now, the reason why I'm entertaining that as a possibility is because we see that this coin tends to be very bullish out of nowhere. You have this structure right here, bull trap. That was a really nice rally off of that sell-off. Again, 300%. This coin likes to move when it's ready to move, and it can be very bullish. And overall, when you're looking at all this data and how it's a 1,500% up from its structural lows at the bottom, that's really positive. So what I'm saying right now is after you have automatic rallies, you tend to get sucked back into the 236. But if this becomes a bull flag, this can easily be like a partial move up into the 618, like a partial flag extension move. Just keep that in mind. This looks decent. Now, it hasn't back tested 8 cents or 7 cents. So I think that if this thing is going to have a spring somewhere into later this year, that's about where you'd anticipate it to come to, somewhere between 7 cents, 8 cents on a deeper sell-off. And then you really have so limited data, it's hard to be trusting on a project like this because it didn't have that 2018 run. From 2017 to 2019. It came into the market clearly at the tail end of the automatic rally cycle of the 2019 cycle. So yeah, even though it has a lot of data and it's made it through the C19 cycle, the C19 Black Swan event, and it's had a cycle is what I meant to say, and it's corrected its amount and had a nice automatic rally. I mean, it's still, you can't be super confident on this sort of stuff for a big portion of your portfolio. I would not mind having like 4%, 3%, maybe even 5% in something like this if I've done enough research and I'm really, interested in the long-term vision. But Now this is not something that I would feel super pessimistic about, though, just based on the analysis. It's looking like a decent chart. So awesome. It's nice to see some of these once in a while. Now we're going to go over to Chainlink, which has been getting really drained out lately. We can see that it went on to a new low in the structure. So this is really into selling climax territory. It broke $5 on the downside. Thus far on the sell-off, we've come down 91% total. So I've talked about this yellow trend line on many TA breakdowns of Chainlink, and we've pretty much hit it. So we're there, we're back testing this important level. So let me zoom out and show you what this is. We have this initial spike into 2019, a big correction. Then we had a nice W, which then led to the C19 crash. That was this moment right here. And look at how we keep gravitating back to $4.60, between $4 and $4.60 and $5. That's the level that we kept coming into. Let me show you. Something like this. Now, when we finally decided to break above that, which was a rejection point for a year, we rallied to the end of the alt season, right? And now we've returned effectively back to that level. So I like this, and this is kind of opening up my mind to Chainlink and its fact that it's pretty oversold now. And the problem here is, can it dip down now into $3? That would really be ugly. But if you were to think about how much that correction is, that would be 94%. That's about what most altcoins do. So it's not out of the cards. Yeah, it would look ugly, but this isn't the most handsome looking chart anyways. I mean, we do have to bow down though to this fucking run of 32,000%. That's insane. Especially during a time frame where not everything else was super bullish, whilst this was pretty bullish in this moment, breaking into all-time highs before the C19 moment, while most coins were still at lower highs comparatively to their peak of 2018. Chainlink was an isolated project when you think about it that way. It did have this rally, whilst everything else was pretty much suppressed at lower highs. So I'm not changing my mind on Chainlink, though. I believe it is part of this future transhumanist, VR metaverse world that we're heading into. Of course, being an oracle, connecting different blockchain protocols to each other, somewhat of a translator, if I had to simplify what this is, along with other projects such as Band Protocol, and there's plenty others. I think Chainlink is the one. It's the oracle, and it makes sense to hold some of it in a portfolio. Somewhere around 5% is probably where I would feel comfortable. 3 to 5% is fine. And I want to hold off on investing in this until the fall time. I want to give this a moment because clearly the automatic rally energy never came to fruition. It couldn't clear the 382. Once it got to this 236, it trapped there for, this is probably a year now. Over a year, it's been trapped between the lows and the 236. That's not very bullish. But these types of coiling up moments, and when it can't make a decision, means that it tends to pop. So could this be the fake out spring that sends you into like the 382 and then we get a rejection at the 382 and then fold over? That would be more how I would look at this if Bitcoin was to move another leg higher. And of course, if it could break the 236. I'm not trying to give you hopium right now. It's just, this is how it would be technically. So let's move on to Trios. Shout out to my brother Omar, private client of mine who's been asking me to look at some charts for him. And this one was really intriguing. Now, we're very limited on the data here. We only got about a couple of years and moving on to its third year. And this got lucky because it was just launched at the right place at the right time. So it instantly went up, in 70 days, it went up 5,000%. Came down for a pretty deep correction into the, was it $2.50 level? And then look at this bull trap, like mama mia, this coin can move. So it went up 1,000%. Oof, that's really wild for a bull trap. And then we got this lower high right here when it could not hold the $3.20 level. That's Mayday. Dipped all the way down into 79 cents. So the overall sell-off on this project is 97.5%, pretty similar to like the move Hex had where it dropped that much. Obviously, Hex had a much more intense bull run, but a totally different project. We're not comparing the two, but we're just saying that, these 95 to 98% corrections are pretty normal in this altcoin market. Now, what's not normal is the way that this has been recovering. This is like a really interesting structure that we're getting here. It's pretty clean to me right here that you have this support, and we're continuing to make higher highs as well. So you have low, higher, low, higher, low, higher, low. And if it could break above this $4 level, I think it could finish off its automatic rally. And the level I would look to is this peak right here of April 6th of 2022, somewhere around $6.70. Could get it up into the 702. We'll have to see. The reason I entertain this idea is because of like moments like this. Like this thing can move 1,000% into a bull trap. Then who's to say that it can't go up another, 1,000%? That would bring you into about $8.70. It's very possible. Off of this level right here to $8.70 would be only 150% more of a move. Okay, so that's definitely in the cards. This kind of theory. But yeah, I think that this level right below the 618 is something to keep in mind. And I feel like this sort of chart is kind of weird. It's rare. I don't really see too many charts that look like this. So yeah, shout out to my brother Omar. Hope you're doing amazing. And just wanted to cover that coin for you this week. Now let's go over to Polygon, Matic. Give some quick thoughts on these. Now, this has had a very dramatic sell-off. I believe that the SEC came after Matic, and it was delisted from a couple of platforms, one of them in which being Robinhood. Even though who the fuck uses Robinhood to invest in crypto? I have no idea. It's not your private keys. So you're investing in like a derivative of, it's just not. Don't use Robinhood to invest in stocks. Don't use PayPal or any of Venmo to invest in crypto. It's silly. Be a custodian of your private keys. You're probably all well aware of that. But anywho, this is a massive bull run rally that this has had. I've gone over this coin so many times, so I don't want to keep going over it, really over what we normally talk about. What I want to discuss here is this return back to the 236 and how it completed its automatic rally perfectly into the 702. And I hope everyone took my call on that very seriously, because when I saw this break out to this golden pocket territory, what am I saying? It's the usual, do not sleep on this opportunity to de-risk at these levels. It's what I told the Hex community when it went up to 12 cents. When Hex went up to 12 cents, I was very, very clear with them that, hey guys, like you can't fuck around at this level. Like you really need to consider getting out. And then a lot of people are talking about how they're long-term and they're staking and they're doing this, that, and the third. And like, it's all fine, but like you need to have a trading bag too. Not a bag you actively trade every single day, but you need to hedge your long-term position too, because now you're faced with a washout of another 94%. Like what's the point? You're here to make money. You're not here to just hodl a coin forever. You don't go to your grave and it says, I hodled the longest on your tombstone. What's the point? So if you have the skill and analysis and coins that are available to make moves with, which you always should, then you could actually take some profits along the way. It's a very, wise decision. It's a sophisticated move. Anywho, I just want to show you how we've gotten the automatic rally. It's done. We are now back at the 236. That's a very technical level, and this can hold for now, but more than likely what you see is a double bottom, which turns into a spring. So what does this mean? This means a washout down to 30 cents, and we clearly see a horizontal trading range here between 40 cents and 30 cents. So that's the next level to consider on the downside. By September, October, especially by October, we should see that at play. We should see a 30-cent Matic. Now, this is where, because we're not going to cover this coin for probably another 3 months. I've gone over it so many times, and we want to give at least like 80 to 100 days in between doing analysis, because we want more data to build. And good news is, 3 months away is September. It's pretty much Rosh Hashanah. So we're going to be doing a lot of coverage, on some of the stuff that we usually cover then, of course. That's to be expected. But we have a thin air, issue between 28 cents and 4 cents. So I would be very cautious about holding this project. Very cautious. Look at this level between here and here with no volume, no trading range. This is not good. It could fall through this like a bungee jump with no cord. Okay? This is a death fall. You don't want to be in this during this time. So I'm not optimistic on this. I don't care what anyone has to say about who's involved in the project, the white paper, it's irrelevant to me. I look at charts and that's been helping thus far over the past 2.5 years to determine all of these big swings. I have a decoding system and analysis. It's working very well. I'm not trying to be, pompous here or egoic. It's just important because when I see this, that does not make me feel good about building positions. So yeah, I'd be weary. I'd be very weary. What would make me feel confident is if this thing came back into like the point, into the 30 cent level and then popped back above the 236. Then I would feel a little better because on that lower low, that's a spring, and getting back above the 236 is when we confirm test, which is then you anticipate a SOS, and that now we have some structure. This isn't about buying the perfect lows or selling the perfect highs. It's about dollar cost averaging over a long term, but also staying safe in the process. Hoping that this thing doesn't drop through the 23 cent level is just naive. It's time to wisen up if that's what you think. So it's definitely possible for this thing to come down to 20 cents. Now, will it free fall to 4 cents? We don't know. Nobody knows, but just keep that in mind. These coins are very easily sacrificable. Their use case for the New World Order is temporary at best. So let's move on to Flare, and then we're going to wrap up this podcast. Okay, just to quickly share this because somebody in the community made a point that I covered Pulse in the last Red Pill podcast with very limited data. And of course, we have a lot of people here from the XRP community following along. And Flare has always been a part of the conversation for the last couple of years. We have very limited data here on Flare. We're going off of about 159 days. I usually like to work with 1 year. According to CoinMarketCap, the all-time high on this project is somewhere around 8 cents. And that means that this has had a correction now of about 83 cents, but on price discovery to the downside. Okay, this is just a free fall. And if I correct this chart, you'll see what I mean. So I can't do any analysis on this really because it's just been perpetually moving down. At best I could pull a fib like this. Okay, I'll do this. I think this is the best I could do. Right here at 268, I'm going to swing this up to this high. Oh, okay, we're there. We made it. So what I'm doing right now is I'm just showing you that I put in a bearish fib, which is a fib you pull from a swing low to a swing high in reverse. And I put it from this level right here where I could see a test and then a couple of tests before the breakdown. And then I'm pulling it to this high level of about 8 cents. And you can see we're perfectly trading at the 1618. So that's very nice. That's what I teach. Let me turn that into my turquoise color that I like. Okay, so we're on a logarithmic scale and we have our fib log setting turned on right there, and we're at the 1618. So that's gorgeous. That's what we like to see. That's typically the first big correction downside level, and got to hold that now. So if you were to pull a bullish fib off of this whole story, you would see I would go from the swing high to the swing low, and this shows that's really awkward. I'd have to move it over. Okay, now this shows the 236 is at 2 cents. So this thing can get bought up to 2 cents, and then you kind of want to see how it interacts. It could get rejected, and then off of that rejection, it could be pretty dramatic. Yeah, so please be careful because this buyback only coming up to 2 cents, it could easily get rejected and come back down to a double bottom and then continue on price discovery to the downside. So I don't feel confident in any of this. This is a horrible chart. No confidence here at all. We did reach this technical level of the 1618, but there's such limited data and no interest clearly from the retail investor side of things. So it could just perpetually continue falling and falling and falling till it breaks a penny, and then sub 1 penny and lower is totally possible, especially into the end of the year. So Words of wisdom: hold off on these speculative plays unless you're doing venture capital, which is about 1 to 2% position of your overall portfolio with a long-term outlook, and it's like gambling money. You're okay losing $50, then throw $50 in it. That's not financial advice. I'm not a financial advisor, but there's no point in risking large sums of money on stuff like this. So I hope you guys all enjoyed today's podcast. Whew. Packed full of information and data. One of the best ones yet, I think. I hope you guys feel the same. I got so much information out in this one, so hope you took notes. And I'm looking forward to next week to see how this Solstice goes, and we'll be doing Red Pill Podcast 117. Appreciate every single one of you. Much love.